let's talk about Chagee, an absolute titan in the premium tea world. For the last couple of years, they have been on this incredible, unstoppable run. But their latest earnings report, well, it told a very different and much more bitter story. So today we're going to dissect their really difficult quarter and break down their ambitious plan for a comeback.
You know, to really feel the shock of their bad news, you first have to understand the hype. Between 2023 and 2024, Chagee was in what its own CEO called a period of rapid expansion. I mean, they snapped up over 7,000 prime locations all across China, basically pioneering the fresh tea leaf category and building this massive base of nearly 240 million members. By all accounts, they were completely unstoppable.
And then, bam, the company dropped this number. In the fourth quarter of 2025, Chagee's same-store sales, which is maybe the most critical measure of a retailer's health, took a nosedive, plunging by 25.5% compared to the year before. For a company that was literally defined by its growth, this wasn't just a stumble, this was a full-on screeching halt.
Right? It's the billion-dollar question. How does a company with that much momentum just suddenly hit a wall? Was it something about the market, or was it something happening inside the company itself? Well, as it turns out, it was both. Okay, so let's get right into the anatomy of this stumble. As you're about to see, this wasn't just one single problem. Oh no, it was a perfect storm of factors that hit the company all at once. First, just a quick primer so we're all on the same page. When we talk about same-store sales, we're not looking at shiny new store openings. We're asking a more fundamental question. Are the established stores, the ones that have been open for over a year, still growing? A negative number here, like the one we just saw, means the very foundation of the business is weakening.
The pressure really came from two directions at once. Internally, Chagee was right in the middle of this massive organizational shakeup, which just slowed everything down. They even had to pause new product launches. At the exact same time, on the outside, a brutal price war was erupting on delivery apps, and consumer spending habits were shifting. They were getting hit from the inside and the outside, simultaneously. And you know, to their credit, the company didn't try to hide from it. On the earnings call, the CEO, Chagee, was surprisingly candid. He admitted they took a few detours and totally underestimated just how complex their own adjustments would be. This wasn't just some corporate PR speak. It was a pretty frank admission that, yeah, they had some serious soul-searching to do.
But here's the crazy twist in the story. While their home market in China was in complete turmoil, another part of Chagee's business was quietly and absolutely booming.
And wow, this just perfectly illustrates the contrast. Just look at this tale of two markets. While sales growth in Greater China was down over 25%, their overseas business was exploding. The total value of everything they sold internationally was up an incredible 84.6%.
And this was no fluke either. They ended 2025 with 345 international stores. They pushed into 4 brand new countries, including the United States. They had this genius Hello Kitty collaboration that went viral all over Southeast Asia, and they've already got their sights set on opening in Korea next. The global plan? It was working, big time.
So, armed with those harsh lessons from their home market, but also with this huge confidence boost from their global success, the company laid out a really detailed 5-pillar plan to get everything back on track. This comeback plan is a total overhaul. They're upgrading their brand with fresh store designs, they're innovating new products specifically for a younger audience, and they're even creating new scenarios for drinking tea. Think energizing morning drinks to compete with coffee. And behind it all, they're improving the in-store vibe and totally streamlining their internal tech. It is a full system reboot.
Now, the most crucial part is this isn't some vague promise. They have set a crystal clear, time-bound goal. Stop the bleeding in the first 6 months of 2026 and get back to actual growth in the second half of the year.
And check this out. This is a massive strategic shift. They're getting rid of the old model where they just made money selling supplies to their franchisees. The new model is all about revenue sharing. The company's success is now directly tied to their franchisees' sales. It's a true partnership where everyone wins together. But this whole recovery plan, it isn't just about fixing the problems of 2025. No, it's about setting the stage for a much, much bigger ambition. And honestly, this quote from the CEO says it all. He isn't just thinking about selling cups of tea. He's thinking about changing culture. The playbook is Starbucks, which made grabbing a coffee a daily ritual for the entire world.
Chagee wants to do the exact same thing, but for tea, starting right in the US.
What's crucial here is that they know this is a marathon, not a sprint. The CEO explicitly called their global expansion a 10-year bet. They're choosing what he calls the hard way in the US, investing heavily in building the brand instead of just chasing quick profits from franchisees. The whole goal is to create a powerful, repeatable model that can eventually make tea a daily habit for all of us. Which leaves us with this final thought. Chagee is making a huge wager here, that by taking some short-term pain and playing the long game with their brand, they can not only bounce back from a disastrous quarter, but actually fundamentally change the way the world drinks. So the big question is, will it pay off? And are we on the verge of a global tea revolution?